Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Shanghai Dazhong Public Utilities Group Co.Ltd. Annual Report. Shanghai Dazhong Public Utilities Group Co.Ltd. is a diversified company that operates through multiple segments to provide various services and businesses. The company's primary activities include pipeline gas supply and sewage treatment, which are carried out through its piped gas supply and wastewater treatment segments. In addition to these core operations, the company also engages in public infrastructure projects, investments, transportation services, and financial services. Its city gas business involves the sale of gas and provision of gas installation engineering services, while its environmental and municipal works segment includes investment, construction, and operation of sewage treatment plants. The company's urban transportation business provides integrated transportation support services, including taxi, car rental, road passenger transport, and tour coach chartering. Furthermore, Shanghai Dazhong Public Utilities Group Co.Ltd. offers non-banking financial services such as financial leasing, factoring business, asset management, and venture capital investment. Overall, the company's diverse range of businesses and services makes it a significant player in various sectors, including energy, environment, transportation, and finance. Shanghai Dazhong Public Utilities Group Co.Ltd. market capitalization of 19 billion is significantly larger than the average industry peer of roughly 1 billion. This shows that Shanghai Dazhong Public Utilities Group Co.Ltd. holds a significant advantage in their industry. Shanghai Dazhong Public Utilities Group Co.Ltd. trades at a higher price-to-earnings ratio of 20 times and a higher price-to-book ratio of 0.92 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price to value than it appears. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap. The leverage on the balance sheet appears elevated, with liabilities of 55% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The primary drivers of revenue growth for Dazhong Group can be attributed to several key factors. Firstly, the expansion of Nantong Dazhong Gas Equipment Co.Ltd.'s business led to a significant increase in revenue. Additionally, Shanghai Zhangzhou Equipment Leasing Co.Ltd.'s exemption from certain surcharges contributed to its revenue growth. The expansion of Lianyungang Dazhong Environmental Treatment Co.Ltd. sewage treatment business also played a crucial role in driving revenue growth. Furthermore, the revenue growth of Hainan Dazhong Ocean Industry Co.Ltd. and Shanghai Zhangyi Tongxiang Supply Chain Co.Ltd. were notable contributors to the group's overall revenue growth. On the other hand, the decline in utilization, rate of cargo, rental license, and decrease in number of BH-licensed vehicles, rented and rental prices, led to a decline in revenue. It is also worth noting that joint venture revenue increased in 2025, while the group's share of joint venture results decreased significantly. The dividend received from the joint venture was a new source of revenue for the group in 2025. Overall, these factors highlight the complexities involved in understanding the primary drivers of revenue growth or decline for Dazhong Group. The net income of the company experienced a significant decline from Rm 116 million to a loss of Rm 194.7 million, resulting in a decrease of Rm 310.7 million. This downturn can be attributed to several factors, including the limitations of the traditional profit-making model that relies on interest spreads in the financing lease industry. Additionally, fluctuations in the fair value of financial assets and changes in estimation and assumptions also contributed to the decline. On the other hand, the gross margin on gas and energy business saw an increase of 0.12 percentage points from 10.36% to 10.48%. However, overall profit margins decreased due to various external factors such as exchange rate fluctuations, changes in value of financial assets and investment income, an economic downturn, and depressed capital markets. These factors collectively led to a decline in the company's profitability. The company's financial performance indicates a significant improvement in its ability to generate cash. According to the latest data, the company has successfully transitioned into generating positive operating cash flow. This is evident from the net cash flows generated from operating activities, which stood at RMB 1,087,349 in 2025 and RMB 405,522 in 2024. This shift towards positive operating cash flow is a crucial milestone for any company, as it signifies that the business is now capable of generating sufficient funds to meet its financial obligations without relying on external financing. The increase in net cash flows from operating activities over the past year suggests that the company's operational efficiency and profitability are improving, allowing it to generate more cash from its core business activities. The positive operating cash flow also provides the company with greater flexibility to invest in growth initiatives, pay off debts, or return value to shareholders. Overall, this development is a testament to the company's financial resilience and ability to adapt to changing market conditions. The company's debt level has undergone significant changes over the past year. While total debt decreased by -103,741, a closer look at the breakdown reveals that corporate bonds payable increased by RMB 645,156 in 2025. This increase was partially offset by decreases in interest-bearing bank borrowings and trade and bills payables. Notably, the company's net debt decreased by RMB 7,790 million from January to December 2025, indicating a reduction in overall debt obligations. Interest-bearing bank loans also saw a significant decrease of RMB 300,782 million during this period. Lease liabilities, on the other hand, decreased slightly by RMB 1,928 million. The company's interest expenses have also seen a notable decline, decreasing by RMB 7,404 million from January to December 2025. This reduction in interest expenses suggests that the company has managed to reduce its debt burden and associated costs over the past year. The performance of various regions and segments in the market has been mixed. On a positive note, China's natural gas market, sewage treatment industry, logistics industry, and new energy vehicle market have all shown strong growth. These sectors have been driving economic expansion in China. In addition to these domestic successes, other areas such as public transportation services, financial services, and gas and energy have also performed well globally. These industries have seen significant investment and adoption, contributing to their success. On the other hand, one segment that has struggled is wastewater treatment infrastructure. Despite its importance for environmental sustainability, this sector has lagged behind in terms of growth and development. This underperformance highlights the need for increased investment and attention in this area. Management is optimistic about the company's outlook, expecting a moderate recovery in the natural gas market. This will enable the company to strengthen its ability to ensure natural gas supply. To support operations and growth, management plans to leverage financial instruments, maintain a diversified financing system, and focus on strategic investments. The company aims to utilize unutilized proceeds by the end of 2026, subject to market conditions and business development pace. However, no specific plans for material investments or capital asset acquisitions have been made as of December 31, 2025. In line with its business philosophy of steady progression and robust growth, management is committed to pushing forward public utilities and financial investment. The company will also focus on green and low-carbon transition in various industries, including sewage treatment, logistics, financial leasing, and venture capital. This strategic approach is expected to drive the company's growth and development in a healthy and sustainable manner. The company has made several strategic moves through acquisitions and divestitures in recent years. In terms of acquisitions, the company has purchased a 50% equity interest in Shanghai Dazhong Gas and Nantong Dazhong Gas. These acquisitions are likely aimed at expanding the company's presence in the gas industry. On the other hand, the company has also made some strategic divestitures to optimize its operations and reduce costs. The company has sold off a cargo rental license with an indefinite useful life, resulting in an impairment loss of RMB 25,600,000. Additionally, the company has fully impaired goodwill, indicating that the value of these assets is no longer considered recoverable. These divestitures are likely aimed at streamlining operations and improving financial performance. Concerns have been raised regarding the accumulation of inventory, also known as inventory buildup. This issue is highlighted in a report where it is explicitly stated that there are indeed concerns about inventory buildup. Furthermore, data analysis reveals a significant increase in finished goods, with a notable 43% rise from 2024 to 2025. Such a substantial increase suggests that the supply chain may be experiencing difficulties in managing inventory levels, potentially leading to disruptions and inefficiencies. That concludes the financial summary for Shanghai Dazhong Public Utilities, Group Co.Ltd. Feel free to comment below, and I will be happy to answer them when possible.